Hello, everyone, and welcome back to another episode. I'm your host, the Millennial Investor, and today we have a lot of information to go over. Of course, as always, we're going to give you guys an update on my portfolio and what I'm going to be doing on my investing strategies. They're also going to be showing you guys my portfolio as a whole, as well as my dividend yield. It has gone down quite a bit with the stock market rising every single day. And then we're also going to be going over some information for the riots. What I want to be going over for the riots is nothing to do with the political sense and more so the economic sense, because this channel is about finance and investing. I wanted to go over the pain, economically speaking, that is going to be left behind these riots. And then in the top 5 things you need to know about the stock market that CNBC wrote, I wanted to point out number 2 in regard to the riots. Trump threatens to deploy the military to control protests. I wanted to be going over that. Next, we're going to be giving an update on the weekly jobless claims number. I haven't went over this number in a couple of weeks, and I wanted to give you my new take on that and my opinion on where we're going as a whole. And then after that, we're going to be going over the United States GDP with a 5% annual rate shrink. And then also we're going to be going over some more stimulus information, such as like the $3 trillion in the second quarter for coronavirus relief. We're going to be going over that. And then last but not least, we're going to be going over the total long-term impact of the Rona and how bad it's going to affect our economy in the long term over the last decade. But going back here to M1 Finance, before we jump right into all that stuff, I would like to give you guys a huge shout out. We are now at 13 successful referrals. That number just keeps on going up. Thank you guys so much. If you're interested in using M1 Finance, if you like watching my videos, you want to support me, if you want to get 10 free dollars, all you got to do is click this link, deposit $100. You can keep the app, you can get rid of it. Just give it a try. You got absolutely nothing to lose. Everything on M1 Finance is free. But all you got to do is click this link in the description, and then you get 10 free dollars. It's that simple, and I'll make sure to mention you in the video if you show me a shout out or a screenshot of your portfolio. But those of you that did sign up for my successful referral, I'd like to show you this morning, literally just like an hour or two ago from the time I'm filming this, I did get another $30 from the 3 guys that referred me. Thank you guys so much. I appreciate it so much. I can't even, I'm lost for words. It's amazing that I'm able to benefit not only you guys, but get a benefit for myself as well. And I really, really appreciate everything you guys are doing. So if you want to see an update on my portfolio, I'm performing very well. We have a lot of big winners, and then most of my stocks are still in the green. But let's go ahead and jump straight into the information about the riots. So I found some information here about the Rodney King riots in 1992, and I wanted to point this out and compare this to the 2020 riots. Now, obviously, the 2020 riots are about George Floyd. It's not about Rodney King, and this is almost 30 years old, but still, it's something to note here. So, Victor Matheson, professor of economics at College of Holy Cross, looked back at the Rodney King riots, which happened in LA in 1992. Economic activity in the areas affected did not return for at least 10 years. Economic activity did not return for a decade. There was 1 decade of economic activity that was lower for the places that were burned down, destroyed, etc. He said those riots cost almost $5 billion in economic activity measured in lost sales over 10 years. If people don't feel safe where their businesses are, they don't feel the need to rebuild. So this is really interesting, and I wanted to point out this statistic right here because it goes in line with the long-term effects of the coronavirus, which will be going at the end. Talking about the 10-year period and how much it will affect the economy, this is a very similar article when it's talking about a 10-year period, how long the riots affect the economic activity. So it said it cost them $5 billion over the next 10 years. So you think about how much worse these riots are compared to then, not to mention inflation. So the numbers for the dollar amounts are going to be a lot higher today than it would be in 1992. So almost 30 years later, a dollar is worth a lot less, so there's a lot more money out there. So this $5 billion is going to be nowhere near what these new riots are going to be. It's going to be a lot worse than these numbers, and who knows how many years it's going to take. This could last a lot longer than 10 years. It could last a lot less. I guess we will see. And then speaking of the riots and the economic impact of all of this, we have an ad for Real. Check out, that's a great stock that I was actually been researching all day today. So number 2, we have Trump threatens to deploy the military to control protests. President Donald Trump has threatened to deploy the military if states and cities fail to control the unrest. As Trump spoke on Monday evening ahead of another night of turmoil across America, riot police and military police used tear gas to clear demonstrators out of Lafayette Square, a public square in front of the White House. So those of you that don't know, the White House actually had to shut off all of its lights, and he actually had to go in the bunker down below the White House just to protect himself. People were attacking the White House, and so many violent, heinous acts and crimes have been happening over the last week or two. There's been so many issues, from burning down buildings to murders to vandalism to violence. you name it, it's all been going on. And I think that more than likely, if this keeps on going on between now and the next couple of days, probably by the time I post this video, I think that we'll probably see military all over the place. Any and all major cities are probably going to have military in every corner of the city. So I guess we'll see what happens there. I really hate to see this. I hate to see all the riots, and I hate to see what happened. You all know what is causing the protests with George Floyd. I'm not going to go over that, and I'm not going to go over my political standing with any of this. I just, in general, regardless of the reason, I hate to see so many people being killed, all types of damage happening to businesses, the economic impact, the personal impact, the emotional impact for everybody. I have by no means been affected directly from the riots. I've not had anything destroyed. I've not participated in any protests or riots, and it still makes me sick in my stomach. 2020 for the U.S. as a whole, or really globally, just with the riots and the coronavirus and everything else that's been going on, it really does make me sick to my stomach just to think about how blessed those of you that do still have jobs are. I mean, my hours have been cut down, but I think about how blessed I am that me and my family have been able to keep their jobs because so many people are not, they don't have anything other than a $1,200 stimulus check. They have absolutely nothing. They have no job. Maybe they've had their home burned down from one of these riots. I just, those of you that haven't been affected, just count your blessings because who knows when it's going to hit you next. And I hope that eventually we get all this under control. And I'm sure the military coming in will definitely support that. Okay, so next we're on the jobless claims number. I don't want to bombard these numbers with you every single Thursday when they're released every morning. So another 2.1 million filed jobless claims, but total unemployment shrinks. So this is kind of some interesting data here, and this is why I wanted to bring it up. I try to give an update on this number every couple of weeks, but with 2.123 million claimed, so you can see here the bullet points. First-time jobless claims totaled 2.1 million last week, slightly ahead of the 2.05 million Wall Street estimated. Continuing claims pledged by nearly 4 million to just over 21 million, probably a clear representation of the jobless level. The highest jobless numbers persist even as all states have reopened their economies to various extents. Nearly 41 million jobless claims have now been filed since the coronavirus was declared a pandemic. So if you go here back to the first week, back when you had that massive 2 or 3 weeks when it just skyrocketed to over 6 million a week. It's literally almost a million people a day. Now, over the last 10 weeks, we are now on the verge of 41 million. Over 40 million people have now filed for unemployment. That number is so astronomically high and so much crazier than all of what we're used to. I think it's absolutely crazy that a number like this is even right. It doesn't even seem real. Sometimes when you see these numbers, it's almost like it's so astronomically high that it's hard to even believe it. It doesn't even seem real. And as you can see here, the insured unemployment rate, which is a basic calculation of those collecting benefits versus the total labor force, came down sharply to 14.5 from 17.1 from the previous week. Layoffs continue at a massive scale, according to the latest unemployment insurance report. It is so sad when I was talking about the riots happening and people dying. As sad as that is, it's also sad how many people are losing their jobs because of the shutdown, because of the coronavirus. I hope that this comes to a halt soon. I'm sure that eventually we're getting to the point now where so many people are unemployed, crazy as that is, 40 million, that there's hardly any more that can lose their jobs. As we slowly get closer and closer to reopening the economy, more and more people will get those jobs back, but who knows how long the long-term effects will last for this. We're about to get in that in the next article in just a second. In the next article, we have U.S. economy shrank at 5% annual rate in the first quarter. Gross domestic product, the broadest measure of economic health, fell at an annual rate of 5% in the first quarter, a bigger decline than the 4.8% drop estimated a month ago. So 5% GDP decline is so large. It's the biggest quarterly decline since an 8.4% fall in the fourth quarter of 2008. So we're now getting to the point that we're putting up numbers that is not that far of that of the Great Recession, 2008. During 2008, there were so many issues with the big banks that couldn't be able to. So there were so many issues in 2008 during the financial crisis with the big banks, and there was mortgage issues. And the one thing that's so unique about this recession compared to others, there's been so many financial problems that's caused recessions in the futures. It's like in the 1980s when we had Black Monday and the Great Depression caused by overspeculation in the market and the Dust Bowl and bank issues, and you have so many other different reasons that usually causes recessions, but this is so unique that it's hard to even gauge what's going to happen for the long term. The short term is easy. They can predict pretty close numbers about what's going to happen, but the long term effects is what's going to be important of this. The U.S. Treasury plans to borrow a record $3 trillion in the second quarter for coronavirus relief, already the largest ever borrowing for any full fiscal year. And the agency sees need to borrow an additional $677 billion in July through September quarter, so the third quarter. I think that number will probably rise. If I had to guess, we'll probably get that number over $1 trillion as well. The Fed has just been absolutely throwing out stimulus money like crazy. I'm not saying it's the wrong decision, but the way that they've been spending money is unprecedented. It cannot be compared to any other time. You take even, like I said, the 2008 Great Recession. This is such heavy borrowing, even compared to those times, that it's hard to even calculate what's going to happen. So in regards to the long-term effects, this is one of the only information that I can see in regards to a long-term outlook, like the example it gave here for a 10-year effect. So in the article that I first showed about the riots, it said that the 10-year effect would be $5 billion for these small businesses for the places that were rioted in 1992. I'm sure it'll be 5, 10, 15, 20, 25 billion for these riots that we're experiencing now in 2020. So in comparing that to the coronavirus, they said in a 10-year span that the long-term effects from the coronavirus will be 7.9 trillion, almost $8 trillion in a 10-year span. So in a report issued in response to a request from Senate Democratic leader Chuck Schumer, the CBO said it expected real gross domestic product to be about 3% smaller over the course of the 20 to 2030 period. Before the pandemic hit the U.S. in inflation-adjusted dollar terms, that would drop be equivalent to about 7.9 trillion. So you can read the full report there. Those of you that are interested in reading this article, it's titled Coronavirus Economic Shock to be Felt for a Long Time, CBO says, and it's by MarketWatch if you want to go read the full report there. But 7.9 trillion over a 10-year span, you're talking about almost $1 trillion a year. That is going to be such a negative impact to the economy. So now that we went over all this information, now that you've learned all this information about the riots, about the GDP declines, about jobless claims numbers, about long-term effects of the coronavirus. So now that you know all that information, the big question is, what's the stock market doing? You can see my portfolio here has been going pretty much in a straight line up day after day. What about the stock market? Let's go to the SPY. So let's look at the SPDR ETF for the S&P 500. Well, first of all, let's look at today. Up another 0.5%. You can see straight shot up right as the open, just straight up right in the green. So you can see the 5-year performance now is now up 44%. And the year, we're up 11.3%. In the long run, the S&P usually goes up in the long term about 9 to 10% a year. 9.8% is the long-term average all the way back to the Great Depression days, factoring in recessions, bull markets, everything with dividends reinvested. So already in 1 year span, we're already past that. Think about all the numbers I just said. GDP declines at record numbers, unemployment, record numbers, riots, illnesses, so many issues going on, but the stock market's at all-time highs. It's nearly at its all-time high. You see the NASDAQ here, if we go to QQQ, so the NASDAQ is a very tech-heavy sector. It's one of the 3 indexes that people look at. Once again, up on the day. If you look here on the year, it is just a couple dollars from its all-time high. The all-time high is about 237. We're at 234, a couple dollars off. The worst performer of the 3, and even it has performed very well considering all the economic data going on. You can see another straight shot up, the highest performer of the 3 today, up almost a full percent again. A year ago today, it is still up about 3%. I can't even describe what's going on here. It baffles me, it shocks me, it amazes me. And now you see my portfolio. So this is my portfolio here, and when you're in the preview, so those of you that want to click my link to view my portfolio, this is the screen that you'll see for the preview of my portfolio, and it will show you the number of holdings I have and the dividend yield. The dividend yield that I had in my portfolio during the March lows, or when I started buying this, so right around this time right here, it was at 4%. We were over a 4% dividend yield. Now, all of the stocks that have performed so bad are back near its all-time highs or recovered majority of its stock price. I showed the other day some of my stocks I own are at its all-time highs. So like one of the ones I own, a very safe, stable dividend company, J&J, all-time highs just the other day. Apple is another one that I own. Apple, right by its all-time high. It's up again today. Microsoft, right near its all-time highs. It just keeps on going. All these companies that are hitting their all-time highs in the worst of economies. Home Depot at its all-time high, up 30% on the year. Over the 5 years, it's up 121%. Look at the long-term chart on this. Straight V-shot. They talk about the V-shot recovery for the stock market. If that's not a V-shaped recovery, I don't know what is. Had a huge plummet down and then straight back up like it was nothing. So these stocks, it's hard for me to even want to purchase them. I've even considered adding some bonds at this point because I don't see much of a upside potential for stocks. It's getting so ridiculous and so out of hand. I'm going to continue to deposit my money into stocks. I'm never going to stop buying because I'm about long-term dollar cost averaging, and I always want to be putting more money in stocks and in bonds. But I've even considered adding some bonds at these levels because the S&P 500, the SPY at $307, and considering its peak was at 338, which I thought was pretty overvalued. Anything above 300, it's insane. It's ludicrous. It's crazy. I'm really starting to see a lot more upside potential for anything outside of equities. Now, I do know that the economies will reopen back up, and this is why I try to tell you people not to try to time the market. Because if you were just looking at the economic data, if you're looking at the jobless claims, the GDP, the riots, the coronavirus, all this horrible stuff, obviously I would ask you, do you think the stock market would be up or do you think it would be down in all this? 99.9% of you would say, oh yeah, for sure, the stock market's going to be crashing, hitting all-time lows. No, we recovered almost all the way back to normal. Quantitative easing, the money printer, is really doing its job. It's getting out of hand. It's getting ridiculous. And at this point, I'm lost for words. So, guys, that's my opinion on the stock market, on the coronavirus, on the riots, jobless claims, GDP growth, long-term effects of the economy. And at this point, guys, one thing I've even considered, and I was considering making a video about it. You guys can let me know down below if you want to see a video about it. Two of the bond ETFs I considered adding, if I'm going to add them. I want to see how stocks perform over the next couple of weeks because I do know the long-term effects for bonds and stocks. In the long run, stocks will outperform bonds, but I will consider adding them if we see a little bit more appreciation in stock price. I want to see the SPY, so what we said right now, it's at 307. If we see it get over 310, 315, I'm probably going to start adding some bonds because at this point it's ridiculous. But anyways, the two bond ETFs I considered adding. One of them is a monthly payer. It is very safe, very stable bond ETF. It is long-term treasury bonds, 20 plus years. It's $307 stock, almost the exact same as the SPY. That's kind of weird. It has almost a 2% yield. It's TLT, and the other one I add is a very, very good expense ratio. Vanguard ETF for bonds. It is long-term bonds for the Treasury, 30-year plus, 2.8% dividend yield, 0.07% expense ratio, which is very low, and you can see it is near its all-time high. And that's part of the reason why I don't want to buy EDV and TLT is because they are so high, is that so many people are still worried about the economy that there's not as much upside potential. So we're kind of just in a weird funk right now with everything, with the stock market going much higher than it should due to quantitative easing, and then a lot of the bonds are still extremely high priced. So I don't know, I'll let you guys let me know down in the comment section what you guys think below. Thank you guys so much that used my referral link. I'm lost for words, just like I am with the economy and the stock market. I'm lost for words for the amount of guys that have used my successful referral. I never expect so many of you to use it so fast. Thank you so much, 13. Like I said, lost for words. Thank you guys so much. It's able to help me invest in these harsh times when my hours are cut down, and I really appreciate it. Thank you guys so much, and I'll just give you a quick update on my portfolio. I've not made any buys or sells. I am up on a lot of my big positions like before. We are now up 80%, so that actually must have happened just now. We're up 80% on Discover Financial Services, doing very well. These are some of my biggest winners. Some of the biggest losers in the portfolio you can see here. My new position, Starbucks, we're about break even on it. If we go back here, if we go to the top in the long run, since starting the portfolio, I'm now up 20.11% or $347 worth of market gain, 332 from income market gain, and then 14.6 coming from earned dividends. We did just receive a dividend today. It was Wells Fargo Incorporation, and we received that for $1.72. So thank you guys so much for watching all the way to the end. If you have any questions, let me know down in the comment section, and I'll have to catch you next time.